Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's July 7th. Sorry for the late recording here today. Monday after a long weekend here. Got a little busy today. So, anyways, we're going to jump right into it. It's going to be actually kind of a quiet week. Not a lot of economic news this scheduled for this week. Probably the big one will be on Wednesday when we see the minutes from the last FOMC meeting. So that would be kind of the big one as they're going to dive deeper into seeing the background and what they're saying behind the scenes, so to speak. So last Thursday, we had the jobs number came in much higher than expected. So a lot of the big hedge fund companies the heads of the hedge funds were at their places at the Hamptons and stuff. So you didn't see a lot of reaction from it. Today, you're starting to see them come back to work, and they're kind of getting into the swing of things and delving deeper into this. Now, the job numbers came in better than expected, but on the flip side of that, that might mean the the Fed may raise rates a little bit sooner. As remember, the rates were going to be tied to the inflation number as well as the jobs number, and the jobs seems to be showing more and more improvement. We're already reaching about the 6% threshold where they said they'd like to see that reached when it came in at 6.1%. Also, they said inflation at 2%. We had 2 months worth of inflation at a little higher than normal levels, and that's something we need to continue. Now, there is concern that they may start raising rates sooner than expected, which they were initially expecting it to be the second half of 2015, so almost another year from now. But with this new information coming out and the data coming out, it looks like it's possible that the Fed could have may move that up and kind of surprise, which is kind of surprise the markets, and of course creating a little bit of a panic. So as a result, today stock market's down a little bit as they kind of go through these numbers. And remember, they've been the S&P as well as the Dow have been hitting new highs lately as well. Since the Dow now hit 17,000. So these are things to be prepared. Even though it's good news, it could be bad news on the stock market because that means the Fed could be raising rates and slowing things down a little bit. This could be bode well for interest rates because when the Fed looks like they're going to be fighting inflation, that sometimes helps out the bond market because that's the biggest enemy of bond market, which prevents bonds from going upwards because it erodes over the life of the bond life. It erodes the value of that bond market, which is the reason why it hates inflation. So let's go ahead and take a look at the bond market. We're kind of where we left off last Thursday, as Friday we had the day off. So we're at 102.02, and we're currently right about in that same range right now. As you can see, not big fluctuation. So pricing essentially is the same as where we left off last Thursday. So really no change in the interest rates today. Now this could move a little bit more, especially on Wednesday, once they see those FOMC minutes being released. So be prepared for volatility on Wednesday. This week again, light week this week for news, and then also they're getting prepared for the second quarter news. So we'll get the GDP for second quarter, the first initial one. So they want to see if we had much of improvement after a very disappointing first quarter. So those be prepared to watch those news over this coming month here. All right, folks. Thanks for watching. I hope you guys have a wonderful rest of your day, and we'll see you guys tomorrow. Tomorrow I'll have the report up for you in the morning, so that way you guys get your updates right away. All right, have a wonderful day, and thanks again for watching, and we'll see you guys tomorrow.